Hey there, UK taxpayers! Welcome to our comprehensive guide on the High Income Child Benefit Charge, commonly known as HICBC. I'm here to break down how the High Income Child Benefit Charge, or HICBC, affects your child benefit and what you need to know to manage it effectively. If you or your partner earns more than £60,000 a year and you're receiving child benefit, this tax charge could impact you significantly. First up, let's talk about incomes between £60,000 and £80,000. This is a crucial range where the HICBC starts to take effect. If either you or your partner earns in this range, you'll need to repay 1% of the child benefit for every £200 you earn above £60,000. This means the more you earn over the threshold, the higher the repayment. For example, if your income is £70,000, that's £10,000 over the threshold. This is a significant amount that will affect your child benefit, so you'll need to repay 50% of the child benefit you've received. This can add up quickly, so it's important to be aware of how much you might owe. Next, if your income exceeds £80,000, you'll have to repay the entire amount of child benefit you've received. This means, in effect, you won't benefit from it at all because you'll repay the entirety through tax. It's almost as if you never received the benefit in the first place. However, you'll still need to fill out a self-assessment tax return. This is a mandatory step to ensure that the repayment is processed correctly. Now, how is this charge paid? This is a common question, and it's important to understand the process. It's collected through the self-assessment system. This means you need to be diligent about filing your tax return on time. The person with the higher income must complete a tax return and repay the charge via additional tax. This ensures that the repayment is accurately calculated and collected. Even if only one partner earns more than £60,000, the charge applies based on that individual's income, regardless of which partner receives the child benefit. This can sometimes be a point of confusion, so it's important to clarify. So what can you do to avoid this charge? There are a few strategies you might consider. You can choose to stop receiving child benefit to avoid the tax charge, but it's still recommended to register for child benefit. This might seem counterintuitive, but there's a good reason for it. Why? Because it helps protect your entitlement to national insurance credits, which count toward your state pension. These credits are crucial for your future financial security. Let's take an example to make this clear. Examples often help to illustrate how the HICBC works in practice. Suppose you receive £1,100 per year in child benefit and your income is £70,000. This is a common scenario for many families. Since your income is £10,000 over the £60,000 threshold, you'd repay 50% of the child benefit, which is £550, through the HICBC. This example shows how quickly the repayments can add up. The HICBC ensures that higher earners effectively repay child benefit through their tax, even if they continue receiving it. This is designed to balance the benefits received with the income earned. Got it? Great! Understanding this charge is crucial for effective financial planning. If you have any questions or need more detailed advice, it's always best to consult a financial advisor. They can provide personalized guidance based on your specific situation. Thanks for listening.